it's a pleasure to get the thing started today. Start you off with a little bit of a history lesson. My name is Joe Besecker. The company that I'm associated with and founded is Emerald Asset Management out of Leola, Pennsylvania, outside of Lancaster. We have offices also in the Philadelphia area, King of Prussia. And at this point, we have offices in Cleveland, in New Jersey, and right outside of San Diego and Pittsburgh, Pennsylvania. We manage roughly about $5 billion. We're a small. Zip through these slides real quick will give us the foundation. And I'd really like to turn this more into a Q&A because there's a lot of interesting things. I think that this space, the microcap space, and I generally talk about the small cap space, but we could talk about microcap because I think it's very important, is very interesting and it's very dynamic. And I think a conversation about that to the things that interest you would be best. So this is what we do. We have a family of funds. We also have separately managed accounts. Most of our stuff is growth. If you take a look at the $5 billion, I would say $4 billion of it is growth. We also have small cap core, small cap value. That's the ones that are based out of Cleveland. We do have fixed income, the many mutual funds that you see there. Our growth fund, our banking finance fund, which speaking of microcap, a lot of our microcap is in the, we go tiny in the banking and finance. And I'm not selling here, but all of our funds are top decile. And our banking and finance fund is the single best banking and finance fund in the country if you look through a 1, 3, 5, 7, 10, 20 year. Our Insights fund is our mid-cap, and then we have a small cap value fund. We're true to growth and value. We're consistent to our style, so if it's a growth fund, we're very much into growth. If it's value, that we're very true to that area, and we have great experience in leadership. Ken Mertz used to be the guy that heads us up, our CIO, was the chief investment officer for the state of Pennsylvania retirement system before we started the firm. He came on with me. And if you look at the bottom line, and that's what I'd like to talk about, it's all about research, research, research. Mark Twain once said he was rarely able to spot an opportunity till it ceased to be one. We don't want to be like Mark Twain. We want to find these opportunities. We call them our emerald gems. And I have a 16-person research team to help us with that. So we believe that small caps are the greatest opportunity for earning surprises, greater opportunity for inefficiency. It's a hugely inefficient marketplace. Greater innovations, I think most of you here would agree, patents, new products are part of the small cap culture, greater opportunity by the sheer size differentials, and they are much more entrepreneurial. We really believe that this is the last inefficient frontier, even down to the smallest of small. The performance of small companies does not move in tandem with other asset classes. Sometimes it doesn't make sense which way it moves, but it does. And the way you can feel good about what you invest in is to know your companies better than anybody else, and I'll get to that in a second. By adding small cap into portfolios, returns may be improved and volatility reduced. They put that word may in there. It's one of these SEC-approved presentations. It does improve over the long term, and the volatility actually does reduce, but you have to go through cycles, and you have to look at a long cycle for that. This is probably one of the coolest slides that I have. I didn't even need these slides for this presentation, and I think it's really something when you're at a conference like this, you should pay very close attention to. 75% of NASDAQ stocks are below $1 billion in market cap, yet 85% of the research is done on the ones that are greater than $1 billion. That's why there's people like Joe. It's amazing. And it's amazing how little work Wall Street does. It's unbelievable. If you were in my spot, one of the things we were having before we were speaking at breakfast here, 3 years ago, 19% of small cap managers, and that includes microcap, 19% outperform their index, active managers. It's no wonder that plan sponsors, and it's no wonder that large pension funds look at this and say, now we're trending right. I need our competition to do better. We're really good at what we do. We spend a lot of money on research. We have great people, and we have a great process. But the problem is that the whole thing is upside down. You know, you used to pay, and now it's in the 30s. It's like 31, 32. So what's happening is the people that allocate money, they say, well, why bother? Why bother trying to find an active manager? Because at the time it's 20, 25%. We'll just go passive. Well, that's a good idea, but it doesn't work because passive small cap, really you miss a lot of the boat. You can't screen. I was talking to one of the companies here that's a life sciences company. A lot of those kind of companies are non-earners at this point. All right, so they don't go through any screen whatsoever. So there's huge opportunity, a hugely inefficient marketplace, and this is where you're going to find really big opportunities as something like this. This is important, and I do want to spend a minute on this. This is our 10-step research process. It's not something that you have to do. This is our process. I have a belief in life that if you have the right process and the right people, you'll get performance. You have to be persistent with that. I'm throwing a lot of P's at you. And you have to have passion to do it, and we have all that. But this is our Bible right here. So this is our 10-step research process. We review SEC filings, press releases, and news stories. We use a lot of interns to go even deeper to tech council or tech business things. There's a lot on the web, and you could get lost in that, but we use people to help that. We are a big believer in meeting with management. We make over 2,000 company visits a year. Then we talk to their customers, competitors, suppliers, distributors, customers to see how things are going. Competitors, they'll tell you a different story usually, all right? And you got to try to work for suppliers. We want to see how the supply chain's working. Distributors, if there's potential issues and opportunities in the distribution channel. And it isn't until then that we build a financial model, all right? It makes a little more sense to us what's on the page after we get that information. And it isn't until then that we look, if there's research available, it isn't until then that we look at that research. So we think there's groupthink, whatever thinking there is at Wall Street, we think there's groupthink. And we think that the greatest opportunity is to do your own work and then refer. We're not perfect. We can catch things from somebody else. But I don't want to go into it, and I don't let our people go into it until such time that they do make their own opinion. We do an internal report for every company. And so when plan sponsors or consultants or any people come in, they can ask us why we're in a name, why we're not in a name. We can give it to them right there. We write it all down, and that's our template. And like in marriage, and like in business and friendships and anything, the 10th step is the hardest, and it's the one that we constantly have to work on, and that's communicate, communicate, communicate. We're in a world now of technology has been tremendous, and the ability with software and hardware to be able to go do notes with these 2,000 company visits, but you still have to communicate that. It doesn't work just sending an email or a report. You have to have it. And so we have scheduled meetings during the week, and we break them down into sub-meetings. So financials, technology, these are the market outlook innovators. We think there's a great deal of opportunities in fintech. I do not believe that in our lifetime we will spend less money anytime, year after year, in cybersecurity. We'll never spend less than we spend now. And that's a growth opportunity. And it's something that companies have to really pay attention to if they're not in that space. Data center spend, carrier infrastructure, and SaaS models. These are just things. This is from a thing I did. Healthcare, drug development, gene therapy, medical devices. Peter and I were just speaking earlier. I find the medical and life sciences opportunities amazing. We're going to be curing diseases and making great strides every year. It's amazing. And unfortunately, I just had one of my best friends die last week, and I suspect that if he would have had this problem a year or two from now, they're right on the cusp of many things. Dr. John Trojanowski and his team over at Penn are working on some of the important Alzheimer's work. So we see these people. We see it at the university level. We see this stuff. But there's going to be great opportunities here. Consumer rebuilding to respend, that's a long story, which I'm not going to spend any time in. Consumer, I went to a consumer conference about 4 months ago. It was like going to a funeral. It was very, very difficult. My friends at Fury put this together, and I think they gave me the wrong one. If you take a look, obviously the smaller the company, the less the analyst coverage. The percentage companies with no analyst coverage, look at that. On the left side, 300 million and less, it's amazing. And then as you get up towards that billion, you have coverage. The average percent of, but the flip side of it is the insiders, the people that really it matters to, they dwarf the as you go up the scale of insider ownership. And that's who you want to be aligned with management, as long as they're doing a good job. So, the average foreign sales. So when we have these issues of all the things that are going on in international, we don't have that with a lot of the microcaps. These are all microcap kind of slides. And then if you look, 64% of companies with no foreign sales by market cap, obviously when you get into the 300 million and under, and that can be a good thing, especially with what's going on with trade wars, and we have candidates. I was going to tell a joke today, but all I could just say is we have an election coming up. So that's all I need to say. I find it amazing that the actual debates are funnier than the Saturday Night Live recap of it. So, percent of U.S. public market M&A deals. So the opportunities are there in the mid-cap. And if you're a mid-cap manager or you're invested in mid-cap space, the wind is at your back. And as you get bigger, not so much. So it's a great spot for you guys to be looking at and to be in. Percentage of deals there. So that's pretty much what I wanted to show you there. Now I wanted to talk to you. We do make 2,000 company visits a year. Joe, you got to keep me on track time-wise, so I don't know how much time I have. But we do make those 2,000 company visits a year. And 10 minutes? Okay. And I would urge all of you, if I gave you one piece of advice today, is that we're based on Peter Lynch philosophies. We were always based on Peter Lynch philosophies. And I would say, I'll redo his quote. I think people spend more time figuring out what type of smartphone to buy than they do looking at their investments. And one of the things is that as we've been doing this, and at the time when I started the firm in 1991, 92, 65% of NASDAQ and American exchange stocks had 2 or fewer analysts. That number's worse today. And the reason is you got to follow the money. It used to be that you could pay for these people doing this work with trading, but those trading dollars have totally dissipated. You trade now for slivers of pennies, and so the investment banking firms and the investment firms and the trading firms can't make any money on that. The second way they would do it is through investment banking opportunities. But that's not happening for them either. So research firms on the street, in the small and the micro-cap space, they can't make money, so they won't do it. And if they do have a small cap team, and if they do have a research team, it's purely for maintenance. They're not charged with finding new ideas. They don't have the time. They're inundated with earnings. I personally think that one of the worst things we ever got to, I'm that old now, Joe, so are you, that I remember there was a time where we didn't have quarterly analyst calls, quarterly reporting. I think the problem with a lot of companies, they manage to a quarter, or they manage to what the street's expecting for the quarter. And in a small company, we all know with our own businesses, whatever business, in my business, I couldn't tell you exactly when money's going to come in and how. And when I go to make a guess, it's just not right. I think that quarterly analyst calls or quarterly analysts or quarterly reporting is very dangerous. And I would like to see companies pay less attention to that. I'm fine with having a call and telling people how things are going and setting their process and what they believe in and their challenges. But I don't really believe in a lumpy business in small and mid-cap that does us any good. So, my feeling is that there are tremendous opportunities in the microcap. And I'll explain something too, since we're at a microcap conference. It's a really tough dilemma for a money manager when we're looking at this. We have the team and the talent and the process to be able to have a microcap fund. But we are at capacity in our small cap. So if we add that, that would kind of, the names that we would have in there would kind of step over each other. Now you can charge more for microcap, but then you're full at whatever, 100, 200 million, I don't know what it's full at now. So institutionally, it's tough. Now, as you manage as much money as we do now, even if I find one of the great microcaps out there that does really well, how much will that move the needle for my small cap fund? I could buy as much as I could possibly buy into that because we can only buy up to 5% representation in our portfolios and X% of the company. So that's why we have something like our regional bank fund, which we can invest in banks in a pretty good measure, and we're buying many more names, all right? And the banking area for us has done extremely well in the microcap area. And what we find there is management is exceptional, and you're aligned with that because of your ownership position there. So there's great opportunities in that. And as I said, the street is kind of tilted against microcap and small cap. But if you're looking for growth, if individually, or if you're doing specialization, there isn't a better opportunity. And I'll tell you a story real quickly. We'll take ideas from anybody at Emerald because we have a way to vet it out. So a number of years ago, and it's actually become current now, this story. A number of years ago, I was at a colleague's place in Jersey, and I was doing a presentation, and I was staying at his house. And I would do that quite often up there in Red Bank, New Jersey. And I got to know his kids, and he had a daughter and a son. And this son, a pretty precocious 7-year-old, all night long was talking about this thing called Pokemon, 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 Pokemon. This is 20-some years ago. And I was listening, but I didn't really understand. I wasn't paying attention. And I would sometimes stay in the same suite of rooms that they had there, and I was always careful about waking up because he got up. I had to get out of the house by like 6:15. And my friend said to me, "Don't worry, he'll be setting his alarm at 6:15. This is a 7-year-old setting an alarm for 7. He says, "Yeah, he's getting up to watch this show called Pokemon, the thing he's been talking to you about." Well, that struck a chord with me. You know, this kid, we used to call him Sleepy Nick. I mean, he would just sleep the whole time. So went back, started to do the work on it. And we talked to a guy by the name of Al Khan, who was the CEO of a company called 4Kids Entertainment, who at that point had the exclusive worldwide rights for Pokemon, ex-Japan. And Pokemon was this is the first iteration. This is not Pokemon Go. This is the first iteration. And we started to do the work. And I was very impressed. We were very impressed with the team. And this is a guy that had some swag. He had been the person that brought Cabbage Patch Kids into the United States. And he had some other, and he said, "I think this could be the biggest thing we've ever had." At the time, it was about a $30 million market cap. So this is microcap, really microcap. 18 months later, it was over $3 billion. And I'll tell you the quick story. So I was very intrigued, started to find out what was going on, talked to this management, and we, like we do, we go out and we try the things out. So they were having their first ever Pokemon Extravaganza at some mall right outside in New Jersey near Newark. And so I took my video camera. I wanted to interview some people, take it back to our research meeting. And I had anticipated, you know, that this would be pretty cool. Well, I was also supposed to go to the Meadowlands for an NCAA basketball game. This was March, and I figured I'd be there an hour and I'd shoot over. When I pulled off the turnpike and I got near the facility, there was all kinds of traffic. I thought there was an accident. Then I pulled in, and there was no place to park in this whole mall. It was ridiculous. I get out, people were walking up towards me, and they said, "Are you going in?" And I said, "Well, yeah, look, I'm just walking towards you. What do you think?" He said, "You're not going to get in." I said, "What do you mean you're not going to get in?" "I'm just going to this electronics boutique type thing." He said, "No, the fire marshal closed down the mall. The mall." And all I saw were these parents like this and walking with the kids crying because this is before Pokemon, this is where I saw it. I did get into the mall, I did interview, and they should have shut down the mall. It'd be like fitting 2,000 people in this room. And it was amazing. And then we did all the work and we followed that up. There are great opportunities in this space. I would urge you not to be like Mark Twain. There's stories like that I could go on the whole time. but the thing is you got to do your homework. He's saying time's up. You're giving me 1 minute. I'll do 30 seconds. So that 10-step research process that I showed you is something you can all do in some measure. And don't be like, as Peter Lynch said, spend time on this, do your work, and you'll find that there are tremendous, go to these meetings here, see the people. In real estate, it's about location, location, location. In micro and small cap, it's about management, management, management. And what happens is you have to meet this management, you have to see what's going on, and you have to keep it and hold them accountable. But when you do, you'll find great opportunities. And I believe that growth in America, despite these candidates and all this, I think is alive and well. I think entrepreneurialism is alive and well. You know, Steve Jobs used to say, I want to wake up every day and think of do something wonderful. There's many people across this country. We had this big 08-09 thing. There's a lot of people who have created their own businesses. I think growth in America is going to be fabulous. I think you're going to find great opportunities. And I think we're in a renaissance of entrepreneurialism, and I think that you can invest in that and make a ton of money. And with that, I'm done, you say. All right?